We're deep diving into the world of big tech stocks. We'll be looking at Apple, Amazon, Google, Microsoft, NVDA, Meta, and Tesla. I'll break down their performance, trends, and when might be the right time to consider buying. Let's kick things off with Apple. Apple's been on quite a journey. Since 2016, it's seen a massive 723% climb until January 2022. That's the kind of growth that gets people excited, right? But here's the thing, past performance doesn't guarantee future results. Looking at the monthly chart, we're currently in what I call phase 4. From April 2024 to its all-time high in July, Apple climbed 19%, but then it pulled back 7% leading up to earnings. This is where it gets interesting. On the weekly time frame, Apple's trading above both the 50 and 200 simple moving averages. Our proprietary trend filter is showing green despite that 8% dip from the all-time high. This suggests that the overall trend is still bullish. Now let's zoom in on the daily time frame. We can see that the stock's price is trading below both the 20 and the 50 simple moving averages, but it's still trading above the 200 simple moving average. Our proprietary trend filter has also turned red. So the question is, when's the right time to buy Apple? Here's my take. People love buying the dips. But right now, Apple isn't at a strong support zone. It could keep dropping until it finds solid support. The next levels to watch are the $200 round number and finally the 200 simple moving average on the daily time frame. My suggestion, patience is key. Waiting for a breakout and new all-time highs might offer a better entry into the trend. Remember, we're looking for a confirmation of the trend to continue before we enter. The analysis I've just used is what we call our 4-phase sequence method, or the 4PS method for short, which breaks down like this. Phase 1 is identifying a stock with a proven performance history. Phase 2 is waiting for a prolonged consolidation or a base to form. Phase 3 is a confirmation of a breakout from that base. And phase 4 is where we enter the stock right at the start of the next major uptrend. Okay, next up is Amazon. Amazon's had an incredible run. From its 2014 low to September 2020 high, it climbed a whopping 1,173%. That's the kind of growth that can change lives. But since then, it's been in what I call a phase 2 consolidation or a sideways market. On the weekly chart, Amazon's below the 50 simple moving average, but above the 200 simple moving average. The trend filter is grey. The daily chart paints an even bleaker picture. The 20% weakness from its all-time high shows the stock price trading below all 3 moving averages, and the trend filter is red. So the question then is, when is the right time to buy Amazon? Well, it is currently in very uncertain territory. We need to see a clean breakout above the all-time high and a move out of this phase 2 consolidation before considering positions. You could enter now, but you risk being stuck in a sideways market for a while. Remember, it's been in phase 2 for 2.5 years already. Okay, next up is none other than Google. Google's been on a steady climb with a 392% increase from November 2014 to February 2022. It then entered a consolidation phase until March 2024, followed by a breakout in April 2024. On the weekly chart, Google is above both the 50 and 200 simple moving averages, which is bullish. Our trend filter has turned from green to grey with the 16% decline, indicating we're in a pullback or some kind of correction phase. The daily chart shows the stock still above the 200-day simple moving average, but below the 20-day and 50-day simple moving averages. Our trend filter has turned red, confirming short-term weakness. So again, the question is when to buy Google. The daily 200 simple moving average is immediate support below the stock's price. A bounce from this level will indicate early buying opportunities for experienced investors. A breakout and new all-time highs will be a much stronger indication of a new uptrend and will offer buying opportunities for more patient investors. For now, there's really no clear trend direction, so it might be best to wait for a further confirmation of a trend before buying. Okay, next up is Microsoft. Microsoft has been a stellar performer, climbing 477% from 2018 to November 2021. It then consolidated until October 2023, broke out in November 2023, and climbed another 28% to its all-time high before declining 15% from July's high, leading up to earnings. The weekly chart shows Microsoft below the 50 simple moving average, but above the 200 simple moving average. And our trend filter has turned red, suggesting we could see further weakness. On the daily chart, the price has fallen below the 200 simple moving average, and our trend filter is also red. So the question is, given the fact that we have some bullish and bearish factors, when is the right time to buy Microsoft? Well, what's positive is that Microsoft is finding support at the highest point of 2023, which is around $384. A bounce off this level and a move back above the daily 200 simple moving average will indicate early buying opportunities for experienced investors. A breakout and new all-time highs will be a much stronger indication of a new uptrend and will offer buying opportunities for more patient investors. Like Google, for now there's no clear trend direction, so it might be best to wait for further confirmation of a new uptrend before buying. Okay, next up is NVDA, the stock that has been getting all the hype since the AI revolution. NVDA has climbed 306% from May 2023 to June 2024's all-time high. It's currently down 28% from its all-time high. The weekly chart shows NVIDIA above both the 50 and 200 simple moving averages, with our trend filter shifting from green to grey, suggesting that we are potentially seeing short-term weakness. On the daily chart, it's below the 20 and the 50 simple moving averages with a red trend filter. However, it's still above the 200-day simple moving average. So again, the question is when to buy NVIDIA. A move above $100 will indicate early buying opportunities, but more conservative investors might wait for a breakout to new all-time highs, confirming a new uptrend and a bull trend continuation. Okay, next up is Meta. Meta's had a meteoric rise of 496% from November 2022 to March 2024. It's currently in a phase 2 consolidation stage around $500 per share. The weekly chart shows Meta trading above both the 50 and 200 simple moving averages, with our trend filter alternating between green and grey, confirming that phase 2 sideways market. On the daily chart, it's still above the 200-day simple moving average, but swinging around the 20 and the 50 simple moving averages, again confirming the sideways market. So the question again is when to buy Meta. Entering now risks being caught in this sideways market. We're looking for a clean breakout, preferably to the upside with new all-time highs, before considering adding to our positions. Okay, and next up is Tesla. Tesla's the least interesting stock for us in the big tech category right now. It had an incredible 1,550% rise from December 2019 to November 2021, but has been stuck in a sideways market since. Until we actually see a clear trend direction confirmed by a breakout and new all-time highs, we're standing aside. 33% of the S&P 500's returns so far this year is attributed to NVIDIA. Watch this next video on how we first saw an opportunity to invest in NVIDIA back in 2016, well before the AI hype, and the 3 major uptrends we have invested in since.